The US dollar index has almost recovered after its June fall. Demand for safe assets, including the Japanese yen, rose sharply as tensions between the US and China increased. One more round of the US-China trade talks failed. Donald Trump broke a fragile trade truce and threatened to impose new 10% sanctions on all Chinese goods. According to the US president, Beijing does not keep promises. The market showed an emotional reaction to such an escalation of the conflict. The Chinese yuan nosedived to its lowest since November 2018, while the safe haven yen gained a momentum. The dollar-yen pair lost all its early gains, which it got after the Fed's meeting, and plummeted to 106.98. Thus, the quotes returned to the local lows of July 19. However, the US-China trade conflict's escalation raises the volatility of shares and bond yields. It may have an impact on the greenback and the commodity currencies of countries that trade with China. Meanwhile, the Aussie renewed its record lows of January the 3rd after Trump's unexpected statements. Today, the Australian versus the US dollar pair was correcting upwardly in the morning session. Australia's statistical data provides some support to the pair. However, even positive reports could not help the situation, and the pair reversed downwards again, reaching 0.6796. On Friday, the US dollar index slightly declined, but still remains above 98. Today, traders are looking for seeing reports from the US labor market. This data may influence the further monetary policy of the Federal Reserve. For now, the regulator does not plan to keep on reducing its interest rate in the nearest future. Interestingly, weak non-farm payrolls report is likely to have a greater impact on the greenback than a stronger one, as the market's risk appetite is lowering. That's all for now. Thank you for watching and see you back soon.